Interesting time today. We saw the stock rally 17%. Does that indicate to you that a deal's getting done no matter what? Investors have smelled blood here?
Well, I don't know about smelling blood, Trish. It's good to be on even in the evening from Europe, but I don't know about smelling blood. But when Rupert moves, he usually moves successfully. So it would be very foolish to bet against him. So I would say the deal has a lot to offer. It creates a very powerful combination, U.S. cable and sports, obviously TV and film globally. HBO is a really interesting asset that I'm sure Fox can leverage very successfully. Be a very powerful international cable operation. And, of course, it raises, I think you raised earlier in your program, the question about what happens with Sky Europe. And from a digital point of view, it certainly creates a colossus as well with premium digital inventory. So from our clients' point of view, I think it's an extremely powerful combination and an interesting one that will give our clients access to a much broader platform, not just in the U.S., but internationally as well. So it looks...
Would this actually give, do you think, more... Presumably, a deal like this might provide more leverage, or is there any other match that you might like to see? I mean, from your client's perspective.
Well, I think what our clients look for is obviously global coverage is one thing. They look for the link between what you might call legacy media and digital media, which this will give as well. Globally, I mean, I still believe Rupert is the only media mogul with a really global perspective, maybe because he started out in Australia, whereas most of the companies here in the U.S., of course, obviously started there and have focused on a very strong U.S. market, probably to the detriment of expansion globally. But Rupert's always looked at it through the other end of the telescope. So it's, I think, creates a very powerful combination, will be very interesting to our clients. Obviously, it gives both Fox and Time Warner greater negotiating power, not just with clients, but also with in cable as well, in terms of transmission fees and the like. So very interesting, I think, move. Obviously driven by cheap money, too.
Cheap money, no, a very good point indeed. You get a lot of personalities really at play here. Do you think that Jeff Bewkes really did the best thing for his shareholders by, spinning off Time Warner Cable? I mean, did it make it, in fact, more ripe for an acquisition?
Well, I think Jeff has been very focused, quite rightly, on shareholder value. And you could say at one level, he's probably done too good a job, going to your point. So made it more digestible, if that's the right way of putting it. But Jeff has done, if you look at what has happened to the Time Warner share price over the years, since Jeff has been in control of the business, it's done superbly well. And so certainly you could make the argument he's done too good a job in one.
Too good a job, in fact. So the expectation is a deal of some sort will, in fact, get done. Do you think that Rupert is the one that's going to win out?
Yeah, well, it's always, obviously, there will be a lot of other people who would be interested in this, whether they will take the plunge. I mean, Rupert has the advantage, or Rupert Murdoch has the advantage of controlling his company, and he has effectively voting control. And one of the things that we've seen post-Lehman is companies which have that degree of control actually have been more ambitious and, I would argue, even more successful, actually, in doing some of the things, because companies have tended to be too cautious, as you and I have discussed before, Trish. They tend to be too focused on cost and too little concerned about expanding the top line and growing the business. Now, we've seen a bit of merger activity obviously grow in 2014, which is against that. And here's another example of it. But I think given the control structure inside Fox and inside News Corp, it gives Rupert Murdoch and his family a very strong advantage in getting these sorts of deals done and taking the views that they're taking, which are firm views, decisive views, and very ambitious, obviously. But it's a unique time. There's long-term money at these sort of rates, and we were in the 30-year market last year. To think of an ad agency group borrowing money in the 30-year market at 5.6%, if we tried to do that today, it would be 50 basis points cheaper. So it's an interesting time when you can borrow money for 30 years at these sort of the rates, and of course the 10-year market and shorter market.
Yeah, is there a danger at all, though, in that? A broader question for you, Sir Martin Sorrell. Is there a danger in that you can borrow money so cheaply, and maybe we're seeing some deals happening that you don't want necessarily to happen, or we may look back down the road 5 years from now and say that was just because there was cheap money available?
You could always over-leverage a situation, but I doubt, given the stake that the Murdoch family have in their company, in any combination of the nature we're talking about, that they would take undue risk. I think they would take calculated risk at a unique time in financial history. And you see it with others. You know, whether a year ago we'd be talking about 3G and Warren Buffett and Heinz. And of course, it would be interesting to see, that's another good example as to what 3G's next deal would be. We've been promised it'll be bigger than the previous one. You see a Valiant with an Allergan, also driven in a way by what we're talking about. But certainly you're seeing transactions of these nature. And I think this is another example of it, of somebody taking advantage of a unique moment in the markets, but also having a very strong vision about what they see for the future in content, in TV, in film, in cable, and last but not least, digital.